Hello guys, how you all doing? This is gonna be your second video for today, and now and then you'll always hear me talking about trendline this, trendline that, and it's very easy for people just to say with the trendline you just go there and put a line and then that's it. But there is, the concept of trendline is way too deep. You can't just cover it with one lesson, so that's why I already made I think 2 videos on trend lines, but now and then I'll keep on going back, touching on the trend line, adding more information. So which with each and every video, whenever I make a video, just know that there's a reason or there's something that I want to share. So just make sure that you stay with me until the end of the video, because at the end we just go into the chat and then we'll be using the knowledge that I'm going to be teaching here on a chart. So with Trendline, if you watch the previous video that I made on this channel about how to identify and draw and also take trades from areas, how to identify your area of support. Okay, let's use a different color. Your area of support and resistance. And after identifying them, how do you then draw them? And then after drawing them, how do you then plan to take trades from those levels? So if you watch that video, then you know that at the end I mentioned that a market pause, we can't use it to draw a trend line. So you need to pay attention. So a pause, we can't use it to draw a trend line. Trend lines, we only use that. We use what? We use pullbacks, the peak, and also what you call this, the trough or whatever. Yes, we just want this and that. But that market pause, we can't use it to draw a trend line. Reason being that if we use it, we don't want a trend line to be too sharp. Because if it's too sharp, you're going to end up getting false signals. Because remember, if the trend line is going down, we want it to have like a normal slope. It must have like a normal slope. So if a trend line, imagine price is going down and you have a trend line that looks something like this, or something just slightly curved, something like this. The problem with having such a trend line, yes, it can help you in a sense that you will get the breakout early, but at the same time it can be a negative thing because of what? Sometimes the price is just is just breathing before continuing down. But if your trend line is too sharp, you're going to register this as what? As a breakout, and that's where you'll be trying to shift your mind from being bearish to being bullish, trying to search for buying opportunities, and then when it corrects, then you're out. You see? So you must just make sure that you keep in mind that when you're drawing your trend line, you just want the peak, you just want these points. So if there's an area of resistance there, yes, we can use that area, that pause. If it's an area of resistance and everything is pointing down, we can use that to plan taking trades from to the downside. But our trend line will still be if we had a peak there, our trend line will still be there because of what? We're using this point and this point. We can't use the resistance that's here. Yes, we can use it to plan trades, to say we broke the level and stuff like that. But when you're drawing trend lines, we're not gonna use those ones. So if it's here and it's the trend line is still not yet broken and all the stuff, and the price pulls back to it and everything is pointing down, you're more than welcome to sell that. And the only time you're going to adjust the trend line is when we come back and form a new low. Now it's different. It's different in a sense that this level here, this level, you see, it's no longer the same as a pause. It's like that. So which means that's when you move your trend line and bring it here, the day you're having a lower low. You see? So the key things that I want you to take from this video is that when you're drawing your trend line, you only use the swing and how do they call it? Did they call it a valley or trough or whatever? This is a swing and this point. So those are the ones that you use for your trend line, and we don't use the market pause. Both of them, remember, at the swing you have your area of what? I need to make this clear. At the swing or here you have an area of what? Of resistance, and at the valley here you have an area of support, right? Support. So both the swing and the valley and the market pause, they are areas of resistance and support. Remember, if you're going down and we have a pause, that's an area of resistance. Or if you're going up and have a pause, that's an area of support. So all of them, all three of them, this and this and this. They are areas of resistance and support, and we can use them to trade. But when you are going to the concept of drawing a trend line, that's where it changes. This guy, we are now dumping him. We are no longer using him. We can use him to trade, but we can't use him to draw the trend line. Always keep that in mind. And then what else can we mention with the trend line? So I think it's very important for you to know that this one I always mention it, to say that every time you're trading, just remember when you're analyzing on your whatever time frame that you're analyzing, and then you come to a conclusion that everything is going up, right? And you're planning on buying and stuff. So every time the price on your chart or on your time frame, every time we make a new low or a new high, always ask yourself this question: does it changes my market structure? Meaning, do I have to update my trend line? Ask yourself this question. Then you'll know that every time I have a new low, if you're going down, right, and then we did have this and my trend line was there, and I put it there because of what? This is the recent low, right? The day the price does this is a new low. Ask yourself those questions, and then you know that, oh, I have a new low. Now the trend line must start here and connect to the new high. The new trend line is there. That's how you should always ask yourself a question. But just because you have sometimes just because you have a new high does not mean you are going up. So let me confuse you a little. So if you don't understand, you'll ask me, then I'll make a different video. I just want to confuse you and then close it like that. So sometimes making a new low or making a new high does not necessarily mean that the trend has changed. So I'm saying this because you'll find that the price, let's say we are looking at daily, né? Daily looks like this. All right, and we can all agree that daily is going down. The structure on daily is bearish. So daily bearish. I want to confuse you here, but some of you might get it. But if you don't get it, you'll just leave a comment and then I'll address it in the next video. So, and then now the price does this. As you can see, it's going down, right? And then the price, let's say the nearest area of resistance is up there. So when it was coming here, it was just a smooth move. We didn't pause or anything. So the resistance is up there. So now look what the price does. It turns here, it goes up there, it comes back, and then it goes up there. It does this on the same time frame, which is daily. You can see that. I hope you'll agree with me. You can see that the price, what did it do? This is the low, this is the higher low, this is the high, this is the higher high. Then what does that mean? Does it mean now the daily is going up, or what does it mean? Because now you can see we've got higher high and the higher low, and we can put a bullish trend line here. So does it mean the structure has changed or what? Not really, but you can still trade to the upside because of what? How can I put this? I want to make sure that I confuse you guys, because remember, if you're going down like this, for me to move from going down, remember that video that I made about the market structure, how to read the market structure, like how do you tell that the price is no longer in a bearish state, it's now in consolidation, or it's no longer in consolidation, it's now in a bullish move. How do you tell that? If you're going down like that, for me to move from this bearish move to consolidation, I need to break trend line or take out resistance. Then I'll say I've broken one structure of the bearish trend, which means we are no longer in that trend, we are now in consolidation. So it means I'll only go into consolidation the day the price moves up and breaks that. So if in this case it just moved like this, yes, we do have sort of a bullish I don't know, how can I put a bullish momentum at that time. Maybe that week we have a bullish momentum, or that 2 weeks or whatever, we have a bullish momentum. So if you can identify that on this bullish momentum we have a bullish trend line there for short term, it's short term. So when the price comes back, you are more than welcome to try and trade this until maybe you hit that. But remember, the main trend is to the downside. So when you get there, you are out. You know? and you can, the day when it goes out like that, then it means the best what they have, it has been defeated. But until one of the structures is out, we are not out. We just have a short-term momentum which you can take advantage. But when you get there, you are out. You're not gonna, when you get there, because remember the bearish move, it's our main trend in this case. So when you get to the trend line, whatever that you're trying to steal going up, you abort the mission. And then when you get to the trend line, you start searching for signs to sell. Why? Because the main trend is to the downside. But if the price doesn't give you the signs to sell, but rather it gives you a candlestick outside like that, it means the bearish move has been defeated. This smaller short-term momentum has now been it is graduated. It's no longer a short term. It looks like that momentum was very strong. It broke the bearish structure, which means what you then do, because now you have a breakout, you go and mark area of support. And if you check the space between your area of support and the next area of resistance is big enough, you can, if after breaking you come back, you can take a buy and target that. You see? So that's why I would never say that's why I don't believe in, remember the way I always teach you here. We can't say the day when the price, we can't do something like this. When the price breaks the trend line here, and then we buy there and put the stop loss there. What's the reason of placing the stop loss there? And what's the reason of buying when the price has been going up for days and days and days, and when I just want to jump in? It's like trying to catch a falling knife. The knife is falling and then you're trying to catch that. You see, we can't do it like that. We must wait for the knife to land and then you catch it. So we always aim to catch the new wave. So that's why after getting the breakout, I say you identify your area of support, and then you can get the new wave, the fresh wave. I'm referring to this is a fresh wave. This one is exhausted. You can't sell, you can't buy there. This wave is exhausted. So rather we wait for it to breathe and rest and pull back a bit, and then identify an area where it is gonna find support, and then we take that so that we start a new fresh wave. That's what we want. So me getting a sniper, it doesn't mean for me to get a sniper I must buy here. Yes, if you buy there, it's a sniper. But if I don't get a reason to buy, I'm not gonna buy. So you see those people, when the price is dropping, they are fighting to get a sniper. The price is dropping, they buy. They don't have a reason to buy. It drops with them. Buy, it drops, it buys until you blow your account. But with you, you can only buy this falling market if you identified something. If you've done thorough assessment, check different time frames and all this stuff, then you'll be like, okay, it's coming down. Maybe you put a buy limit there. You can only do that. But you can't just say the price has fallen for a long time now, just to 10. I just go and buy. That's not enough. That's not enough. So I don't have to catch this wave. I can just wait until whatever that is happening is over, and then the price goes up. It convinces me that, you know what, the bears are done, the trend line is broken. Then I can start a new wave. My wave is gonna start here. It's gonna start here. This is where I'm gonna get a snipe. I don't have to fight this one. If I don't get a reason to buy there, I'm not gonna do it. But it means I missed the first wave. It's fine, but I can catch the second one. You see, that's how you trade. That's how you trade using the trend line. So I'm gonna end it like that. When I just need to make sure that what I want you to take from this video is that these 2 points. The first one, you only use the swing and the trough or the valley to draw your trend line. You don't use no market pause. You don't use the market pause. You don't use it. You can make your own notes as I'm saying this stuff, because I don't want to waste time writing. You don't use the market pause. But keep in mind that all three of them, the market pause, I'm referring to the market pause, the swing, and the valley, all three of them, they are area of support and resistance. They can be used to trade. But when you're doing a trend line, we drop one. We don't use it. And again, every time you have a new low or a new high, update your trend line. Update your trend line. Then yeah, I'm gonna end it there, guys. I'm gonna end it there. So I'll see you in the next one. So I'm gonna keep on coming back to this concept of trend line up until you all understand it. because it's not just about identifying 2 points on your chart and then marking them. Because of what? It's deeper than that. Oh, let me just go on the chart and try and identify a trend line, and then we can just identify a point where we had a pause and we're not gonna use it for a trend line. And yeah, so let's just go in the chart. All right, so here we've got oil. So I'll try and mark the levels. So this is the all-time high. Oil has never been over that point. So it means when it formed that, we came back. That's a very strong resistance because of what? It's the all-time high. Breaking an all-time high is not an easy exercise for the price to do. So this is your area of what? Area of resistance. I'll mark it like that. It's just that here it was missed a bit, but yeah, that's not the point. And when you're drawing your trend line, this is what you do. You remember, you only want the points that are like this. You see these are the ones that you're using for trend line. But if the market was going, which point can I use? Yes, when it was going up, like if you assess this, we don't have a trend line there because of what? This is just the market pause. We're going up, we paused there for 1 day, and then we shot straight up. So I can't put my trend line at that point because of what? This is a market pause. But I could search for buying opportunities there. If I didn't get it and it got broken, then you didn't buy. Where one? And then the next one was somewhere around there, which is the one that worked. So when you're marking your trend line, there it will be, you will still be here. It will still be here. Or someone can say, but this looks like a swing from this point. Okay, let's zoom in. Okay, I'll give you that. Like from this, you can say this looks like a swing. That is fine. It means your trend line was here. Then you would have wanted to buy from that, and it didn't work out. But the point that I was trying to make is that this point, we can't use it to draw a trend line, but we can use it to search for trades. So every time the price makes a new high or it makes a new low, you always update your trend line. This is what I mean. So you can see here the price, it moved up, and then it did this, which means our trend line roughly was somewhere there. Okay, let's make it somewhere there, right? And then what the price did was that it found the support around the very same area where it got rejected here before. It got support, and then it went up and broke the trend line and also broke the area of resistance, broke the second one. So it means this area of demand or area of support, this one, is very strong. Why? Because it gave us this move which broke the 2 areas of resistance plus trend line. Imagine one move accomplishing all of that. When you wanted the confirmation, that's what you're going to execute. And then look what the price did when it came back to the very strong area of support that we're talking about, this one. Then that's why you got your thing, and then it went up. We have a higher high. What does that mean? I always tell you, when you have a higher high, you put your trend line, and then you mark your, this is something that we spoke about yesterday. And then let me do it this way. We went up, came back, went up, came back. We didn't make a higher high with the first attempt, and then the price, it sort of just pulled back to this one, and then it went up. That's when you made a new higher high, which means your trend line was here. You see, just like that. So that's how you mark your thing. So that's why I'm saying every time you have a new high, make sure that you update, and then you have your thing here because of what high, and then we have a new high, which means let's update. The trend line was there. Always when you have a new high or new low, update. But the way you mark your levels, it's every time you have a peak, this is you can put your thing there, you can put it here as your areas of support and areas of resistance. But we don't always have 2 areas where we can have support and resistance. The normal ones, yes, is these ones, like I'm saying, this one and this one at the top and at the bottom. But sometimes we can find areas of support in between your trend. So that's where you'll be having that market pause. So let's check a weekly and see if we can have like a different structure. Yes, this one, that's a market pause. So you can see we went up and then you paused there, and then the next 2 weeks we went up. Now the price came back, it's bouncing from the same weekly support. So that's why it is important for you to be able to identify the key areas, because of what, it's not always this and this. You can see if you're only using those two, it means when you are waiting here, how long is it gonna take the price to get there? That's if it does get there, you see. But if you know that the area of support can also be in the middle of the trend where we have like a pause, then when the price got there, you know that we're looking to take trades and buy, and you can see that it bounced and then it went up. So that's it. I'm gonna end it here, guys. So just make sure that those 3 points or 4 points that I gave you regarding trend lines, you must have them written somewhere. So the next time I make another video adding more points to the concept of trend line, then you just add to that list. All right, I'll see you guys tomorrow. Yeah, this is the final video. I'm not gonna make another one after this one. All right, sharp guys.